Disclaimer, I'm not a financial advisor. I'm just trying to help from my research and all of that. And I feel like everybody should be investing in the stock market. Everybody should find a way to be growing their savings. Inflation rate in America annually is like 3%. So that means if you keep $10,000 in your bank account, in 10 years, that $10,000 will still remain $10,000, but the buying power will probably be like 5,006. So it makes sense to find a way, work hard, put some money in your savings um, for emergency funds, and at least that can last you 3 to 6 months. If anything happens, God forbid if you lose your job. Then the remaining, make sure you find a way to grow it so that while you are sleeping, the money is working for you. And that's how Americans have been able to make money. Have been able to build wealth. I know many people know Warren Buffett. Warren Buffett has been the stock market has been in existence for like more than 200 years. So this is not like this is what the economy runs by. So again, I'm not a financial advisor. If you can do your research, you can pick the stocks, invest. Stock market is very volatile. People lose money, people gain money. The stock market always goes up over time, like this. It's not a straight line. It's like this, like this. So what smart people do is they try to buy here, keep buying, keep buying. At the end of the day, you will make money. So, but if you don't stop buying, eventually you will definitely make a lot of money. Inflation in Europe savings, like I said, 3% is the inflation rate in America every year. If you put your money in the bank, they give you 0.5%, which is way below inflation rate. The power of compounding interest. If you invest $100 per month for 30 years, it will be $36,000 that you've invested, and you will have made $226,000 at the rate of 10% again every year. So that's why it's always important to invest. If you put $500 in the market, in the S&P 500 for 30 years, it will 1.13 million. That's the power of compound interest. These are the reasons why investing matters. Rising cost of living, your retirement is your responsibility. I know the government tries to help in retirement. That's why we have 401k and things like that. But you are the main, you are the one responsible for your retirement. The government will try their best, but in the long run, it's your responsibility. The government cannot give you more than they can afford. Or you know your lifestyle. Like, so one thing that I usually tell people to do is to do needs analysis. So right now, maybe you are 40, every month, maybe your monthly expenses is like maybe $8,000, $10,000. Your mortgage including that money like that. So God forbid if anything happens to you today, or if you live to 65 and you want to keep that lifestyle, you should do your needs analysis on time so that you know what you need to be putting aside, how much you need to be growing, how fast you need to grow your money, so that by the time you get to 65, you will have enough to take care of that lifestyle that you have right now. So you won't have to run around to make that 10,000 to make up the difference. Because so you have to work the math to know the difference, so that at least you make up for that with your own retirement, but maybe through Roth IRA investment and things like that, or even life insurance. We'll talk about life insurance and another thing. Financial freedom is achievable. Only needs time to grow. For those who are still young, they have a lot of advantages because time is their friend. But for those who are advanced in age, they can't take risk anymore. So basically, what you have right now, find a way to protect it so you don't lose it. But at the same time, make sure you are finding a way to grow it so that while you are sleeping, the money is working for you. So what is stock? Basically, you are buying a fraction of, for instance, Apple is, everybody knows Apple. When you buy Apple stock, you are owning a fraction of the company. So when Apple makes money, you're also making money. If the stock goes up maybe 20% in a year, your money goes up 20% in a year. So if you put $10,000 into Apple this year and it goes up to 36 cents, whatever you put into Apple will go up to. The difference between investing and trading. So investors hold their money for a long time so that it can compound. But traders, they do it every day. Like they could. Traders, they monitor the market more, um is more active. They are more active in their trading. So they make money daily. If you're not doing enough, you lose money. It's very, very risky. Some people do it full time, like they don't have any other job. So many of them make money, but a lot of people lose money. So if so the safest way basically is to invest. Monitor it, do your research, pick companies or do ETF. Monitor it when the market crashes, everything is on sale. That's the time to buy. Warren Buffett usually says we did one other than fifth. March of this year, the market crashed. I don't know, maybe 30%. Everybody was afraid. But those who have been in the market long enough knows that when things are on sale, when quality companies are on sale, because it doesn't happen too frequently. That's the time to, if you need to borrow money, do everything you can. Put it, because when it goes up, you're going to thank yourself. So that's one thing. Like investing can be very emotional because this is your hard-earned money, something you've worked for, and you see it going down. So if you're not disciplined enough and you sell, and one thing I tell people is you don't lose until you sell. If you put $10,000 and it goes down to $5,000, as long as you know that the story has not changed with the company, you know this company is still solid. That whatever is happening is happening with the whole stock market. Find more money, put it because it's on sale. And that doesn't happen all the time. When others are afraid, put money. When it goes up, will make you way more than others. How the wealthy build wealth? They invest in stocks, ETFs, they do real estate, they buy businesses or start businesses. They use bonds. I don't do bonds. I've tried it before. It's too slow for me. It's too slow for me. It's safe, but I feel like I still have time. It's for people who are advanced in age that are trying to protect what they have. Yes, if you have a lot of time and you are comfortable with making a little profit, yes, you can do bonds. Why don't do bonds? Yeah, it's very safe. Definitely, it's very safe. But it's too slow for someone like me. For those of us who are yeah, yeah. Buying stocks can be very rewarding. Like for instance, I will throw out a few stock tickers. Like if you bought like this year when I said the market went down, some stocks crashed by like 30%. If you bought some of them, like maybe Micron, from that March to now, Micron is up maybe like 400% in like 3, 4 months. So if you can do your research and find those individual companies, you can make a lot of money. Yes, if you put your money in S&P 500 every year on the average, 10%. Last year, S&P 500 did like 17%. So some years would be really, really good. But it's a very safe way of investing stock. Just keep buying S&P 500. S&P 500. In like the example I showed you earlier, in 30 years, if you put in $500, putting 500 every month, in 30 years, you will have invested 180,000. And that 180,000 will be 1.3 million, 1.13 million. So that way, we're not doing any research. You're just putting your money in S&P 500, just one stock. One stock. But 30 years is a long time. But it's still better than putting it in the bank and not making anything. So there's something they call mutual funds. It's safer than buying individual stocks. It's like the fund managers, they um they take money from people, do the research for them, get paid for their research, and then invest that money for people. So it is safe, but in the long run, it's expensive because you pay them for the research they are doing. But instead of paying someone to do it for you, you can just put it in ETFs. Like I said, S&P 500. Like there are some ETFs that track S&P 500. S&P 500 means the 500 biggest companies in America, and these companies are very solid to the point that one of them, Nvidia, is worth $5.13 billion. Nvidia is the most stable company in the world. You have to put it in context. All of Africa, our GDP is around, there's a 4 trillion. 54, I'm talking of 54 countries in Africa. And a single company, Nvidia, is worth 5.1 trillion. So companies like that, I'm not going to say a company is safe because for a company that is worth 5.1 trillion, whatever would happen in this world that will bring that company, maybe the world is coming to an end. I don't know. So if you can do your research, find such companies because everybody needs Nvidia. So in this AI race, Nvidia, they produce semiconductors for everything that everybody is doing. They need Nvidia products. Nvidia too is starting to diversify because they know the competition is getting fierce every day. So when you buy just a single company, the risk is high because if that company folds up, it will lose everything. So it's always good to diversify. Buy tech stock, buy Walmart. There are defensive companies that whatever is happening in this world, even if there is recession, there are companies that survive. Like companies like Costco. Everybody needs Costco to survive. Everybody needs PG to survive. Everybody needs Walmart to survive. Like if you buy companies like that, you may not become rich. But you know, if there's recession in America, your money is safe. If their stock crashes, it won't crash like Nvidia would crash. It won't crash like Apple would crash. So companies like that, they don't usually their stocks don't really usually crash. So if it crashes, it's an opportunity to pour money into it. Like I said, they won't make you rich, but your money is safe. For people who are risk averse, who are not open to taking any risk, ETF is the way to go. Like when you buy a S&P 500, like I said, you're buying 500 companies by just buying one like that one ETF. You're buying 500 companies. Yes, you won't make money like if you buy individual stocks, but you can always know that you can sleep well and nothing will happen to your money. And at least you are guaranteed 10% on average every year. Sometimes you can make up to 17%, 20 something percent, but at least 10% is guaranteed every year. So these are stocks that track the S&P 500. VU is one of them. SPY is one of them. This total market BTI, it covers total US stock market. We have over 4,000 companies in the US stock market. So VU is not even tracking the whole thing, but it's tracking the biggest 500 companies. SCHD. This is another stock that I always recommend for people who do not want to take risk at all. With SCHD and VUIM, you are guaranteed to make at least 10%, and they also pay dividends. So it's really good for those who are close to retirement. Also, there are different sectors in the stock market. The energy sector, you have like Chevron, like all these gas companies. So during this Iran war, their stocks have been going up because oil price went up. So there's utility company which is usually seen as defensive, like Duke, for instance. You know that everybody has to pay their monthly electricity bill. So Duke, Black Hills, companies like that, they are said to be defensive stocks. So whatever happens in the economy, people have to run their electricity. They will pay electricity bill. So companies like that are very safe if you are trying to look for individual stocks to invest in that will perform better than S&P 500. And that they also do well during recession. Healthcare too is seen as very safe when there's recession because people get sick. Either there is money in America or not, people get sick. And so these companies will keep making money. Either there's money in America or not, either there's recession or not, healthcare companies will keep making money. Major stock sectors, we have the technology sector. These are the risky ones. So it's not like they are risky, they go up a lot and they crash a lot. And the reason they crash is if there's recession and you invested into Apple, you invested into Nvidia, and your money has grown like 500%, you would want to take out that profit and put that what people do. Like when things are crashing, they pull their money from where they made the highest profit and they put it in like SCHD, they put it in like Walmart. So that's why those companies crash a lot when there's recession because you've made a lot of money. You want to protect that gain. You want to sell and put it in safer companies. That's why when there's recession, companies like ETF, like SCHD, they don't crash that much because people see them as safe haven. They are selling other risky stocks and they are putting it in their bank accounts so that they have money to spend, or they are putting it in companies like SCA. So healthcare is also another safe sector, like I said. Financials is really safe. JP Morgan, their stock is very expensive, but it's very, very safe. It's very safe.
Excuse me, sir. Sorry, I was out there. I ran into this brother. He doesn't have the event. His place is Nigerian, and he just wants to check it out.
I'm so sorry.
He just moved here from Tennessee. He doesn't have any friends.
Nice to meet you. We are all welcome.
He's trying to connect with other Africans.
We'll see after the event. So consumer staples, like I said, they are very defensive when the whole world is crashing, when there's recession. Companies like Walmart, Costco, they will keep making money because people have to eat. Companies like P&G, they will keep making money. Yes, like I said, they won't make you rich, but they protect your money. They give you peace of mind. Industrials, Caterpillar, they're very sickly. When research belongs, construction is booming, Caterpillar makes a lot of money. But when there's no construction, they don't make much money. Energy stocks, like I said, they're also very cyclical. Utilities, they are safe. Real estate is safe, but it depends on what's going on in America. So this is like a snapshot of how you can research companies. We still have another class to teach us how to actually research this company because it's a skill that you need to build. If, like I said, if you want to actually make good money, you should know how to research companies one by one and understand them before you actually invest in them. So that when anything happens, as long as the story hasn't changed, even if the stock crashes, like right now, Microsoft stock has been struggling for like 2-3 years now. Nothing is broken with Microsoft. Microsoft is still a solid company, but the stock has not gone anywhere. But for people who are experienced in investing, they know it's an opportunity. Because when all is said and done, Microsoft is one of the best companies we can find in the stock market. But for 2-3 years now, the stock has been struggling. The company is doing really well, but there's a disconnect between what the company is doing and what investors are thinking. Investors are afraid. So with this AI boom, hyperscalers like Microsoft, like Apple, like they have been pouring money, like Google, they've been pouring money into small companies. They've been investing billions into small companies because they want to win the AI race. So people are afraid. Like at the rate these guys are going, won't their company collapse? And the reason they are pouring money into them is because they know AI is the future. They want to win. They know once they are done building all this infrastructure, data centers, and all of that, they will start making money a lot. So people are afraid with the way Facebook is pouring money into all these small companies. Anything can happen to Facebook. They've been in the system for a long time. They are very smart. Nothing will happen to them. So, but people are afraid. So that's why I said when there is a difference between what the company is doing and what the stock is doing, it is time to invest. Like the stock is broken, but the company is not broken. So do your research, invest when the stock market comes around and understand what is going on. It may be late for people to now invest, but now that it's down, is when to invest. So that when it's going up, you can make a lot of money. So these are things to check out. What does the company actually do? Do you understand the company? Before you invest in any company, you have to understand what the company does. Is their revenue growing every year? Is it consistent? Do they have a moat? Moat means like this company is solid and cannot be replaced by another company. That's the simplest way I can explain it. Does it have a competitive moat? Yes. I just explained that. Is the management trustworthy? Because even if the company is great, but the management is not doing a good job, the company can struggle a lot. So these are just 5 things you want to research before investing in any stock. So I'm trying to move as fast as I can so that we can get into we can get to practice. So, like for instance, everybody understands Apple. Apple, by the way, used to be Warren Buffett's biggest stock position. He held Apple for I don't know how long. Wait, we'll still get to it. Warren Buffett has been investing for like 60 years, and he has made 6 million in profits. Can you imagine that? 6 million in profits, Warren Buffett. He's one of the richest people in the world. Time in the market beats time in the market. That's one thing they usually say. Like the longer you have invested, the better for you. Like money needs time to grow. What we're talking about, we're not talking about gambling. We're not saying you put money today, you invest money today and become a millionaire today. It needs time to grow. At least you look into does the company have a competitive advantage? Like Apple does, Coca-Cola does, Nike used to, not anymore. So yeah, I wouldn't consider Nike as a safe company to invest in. Visa, everyone knows Visa. Anytime you swipe your card, Visa is making money. MasterCard, anytime you swipe your card. So these are companies that do well even during recession. Yes, you won't make a lot of money, but even during recession, you still use the Visa card, you still use your MasterCard. Then, yeah, switching costs. Is another thing that you consider when you invest in the stock market. Cost advantage. Yeah. So these are things you consider. The management of the company, are they also investing in the stock of that company? Like if for instance, Bill Gates doesn't have Bill Gates, doesn't have Microsoft stock, that's a red flag. That's a red flag. Even if you are like you have a huge stake in the company and you are not investing in it, that means you don't believe in that company. So those are things you consider too when you are investing. And these are research tools that you can use to research stocks. Some of them are free, like Yahoo Finance. Some of them are paid, like Seeking Alpha. Seeking Alpha is very, very good. You have to pay to be able to get to research tools, but they're very, very good. The biggest investing mistakes people make is they try to time the market. Like I said, the stock market goes up over time, but it's like this. You can't always time it to get the timing right. Sometimes you buy high, sometimes you buy low. There's something they call dollar cost average. As long as you keep investing every month, maybe you have $100. There's a way you can set it in a way that $100 will be going into your brokerage account every month, or $500, whatever you choose to invest every month. It will be going into your account recurrently, and then you can then use that money to buy. So sometimes you buy here, sometimes you buy here, sometimes you buy here, sometimes you buy here. You cannot always time. This is the best time to buy. This is the best time to buy. But you won't always get it right. You always, sometimes you buy here, sometimes you buy here, sometimes you buy here, you buy here. At the end of the day, your $500 will eventually become a lot of money. As long as you keep buying in great companies, you will make money. Chasing hot stocks. Some of us that we feel we have time are guilty of that. But as long as you know what you are doing, like I said, lately AI stocks have been booming. That boom right now is getting that boom has become like a bubble, and everybody's afraid it's going to burst. It has happened before, but I feel like the story is different now. When it happened before, these companies during the dot-com bubble, these companies were not making money. Anything that has dot-com, people were pouring money into it. And eventually they found out these companies are not actually doing, they didn't get to do what they said they would do. So the companies went and they crashed. But lately, these companies, like everybody knows AI is the future. These companies are actually doing it. So there are companies, I know you know Nokia. Nokia is popular as iPhone maker. Now they're into photonics, which is very useful for building AI infrastructure. So the photonics. So it's like when you're trying to transfer data, photonics help you transfer it via light, which is faster than using electric cables that they used to use. So that's what Nokia is doing. So Nokia is not a regular phone company you know before. Everybody knows where the money is. So everybody is rushing into AI infrastructure, AI. So so that's why I said yes, if you are buying hot stocks, it's risky. But if you know what you are doing, it can be rewarding. Like Micron up like crazy. Micron has gained, I don't know, maybe 1,000% in like the past 1 year. This is it's probably like one or two of Micron that makes what they do in America. Memory, you know Micron, SanDisk, that used to make what's it called? Flash. Flash drive. That company has been making a lot of money because everybody needs what they need, memory. You need a place to store the data. So everybody is rushing to buy Micron. Yeah, like all these Google, Microsoft, they are pouring money into Micron. That's why Micron has been making a lot of money. It won't continue like that. But for now, that everybody is buying into AI companies, it's a good time to also buy. It's very expensive, like I said. Like I said last 2 months ago, the stock market crashed. Micron crashed to like maybe 300 and something dollars. Right now, Micron is 1,001 something in like 2 months because what they are selling, everybody wants. So I would say it's expensive, but it's still going to be more expensive as long as this AI race is still continuing. As long as Google is still spending money, as long as Microsoft is still spending money, Facebook, Meta, all of them are still pouring money into these companies. They will keep making money. So the way to do it is like if you have 1,000 to invest in the stock market, you put 900 into safe companies. Then you remaining 1,000. You put it in micro. You make money. Even if you don't make money, if it crashes, but at least for the next, I don't know, I'm not God, but I feel like for the next 1 to 2 years, these companies will keep making money. But if you put money in stocks like that, you have to watch it. They are not companies who they are doing great. What they are doing has come to stay. But when Google is tired of spending money, when Microsoft is tired of spending money, they will crash. Nothing is broken with their business. They will crash because where the money is coming from has stopped. So when you are investing in these companies, like I said, you can make a lot of money, but these are companies you should watch and you should make sure it's not more than maybe 10% of the portfolio. But if you are ready to take risk, you can. But there are companies that are powering the AI build out. Companies like CEG, Constellation Energy. Constellation Energy, beyond AI, they are also supplying households with electricity. So companies like that, you can invest in them. If the AI race is over, Constellation Energy will still be there. Because what they are doing is more than AI. And they are also benefiting from AI. Their stock has been up, I don't know, maybe 50%. Yes, it won't be 1,000%, or you will still do better than S&P 500. You are finding companies like that, like Constellation and like the importance of diversification. I've mentioned it over and over again that it's always good to diversify. Yes, as much as it's good to take advantage of technology, invest in technology because that's where you make good money. It's also good to also have companies to balance it out because technology companies crash a lot during this recession. So you don't want to put all your money in Nvidia or Microsoft. You want to have Walmart, you want to have Costco, so that whatever happens in the economy, the money is safe. The danger of emotional investing. This is a word is a popular Warren Buffett statement. Be greedy when others are fearful. Like I said earlier, when the market is crashing and you've done your research, you know that the reason why the market is crashing is not because that company is broken. It's because whatever is happening is happening across the market. That means everything is on sale. That's the best time to buy. You may buy and it may crash more. Don't be afraid. As long as the company is not broken, keep buying because by the time it goes up, you're going to be grateful that you bought. But I know it's not easy. Like you're putting thousands into a stock, and it gives. I remember 2 years ago, not 3 years ago, 2022, 2022. I bet, when I first invested in Facebook, Meta stock was around $8. It was around $300. It crashed. It was crashing. It crashed to 180. I was investing until we got to 180. Then I got tired and stopped. But it kept going. It got to 80 something dollars. And now Facebook is something. I wish I didn't stop at 180. But at least I make money from 180 to 500 and something. But it's still not like $80 to. But that same Facebook actually got to 700 before crashing. The reason it crashed is because everybody is afraid the way Facebook is spending money on AI build-outs. So that's why, like I said, if you do your research and you see that a company is crashing, because you know the reason why they are crashing, it's a time to buy. It's the best time to buy. I said that to say that be greedy when others are fearful. Like when everything was crashing 2022, that I said Facebook got to $80. Everybody was afraid who were pulling their money from the stock market. But those who have been in the market for a long time, who had foresight, knew that these companies were doing good. It was just what was happening in the economy. So they took advantage of everything was on sale. They bought and they were able to make money. So Warren Buffett usually says, "Be fearful when others are greedy." When others are greedy, be fearful when others are greedy. Right now, that others are greedy, pouring money into AI companies. Warren Buffett, if I had the opportunity to talk to Warren Buffett, he would tell you to stay away. The truth of the matter is, Warren Buffett actually has, I don't know how many billions on the side. He's not investing right now because he's afraid of everything like that. He's been in the market for long, and he's not looking for money anymore. He has a lot of money, and he has a lot of experience. So, but you can still make money if you do it right. So dollar cost averaging, like I was saying, you can't time the market as long as you keep investing in great companies. Sometimes you will buy high, sometimes you will buy low. By the end of the day, you will make money if you stay in the market long enough. So the importance of time horizon. If you have 3 years, if you are retiring in 3 years, if you have something, you only have 3 years to retire. This is not the time to be buy Nvidia. This is the time to put your money in high savings account. High savings account will give you maybe 4 point something percent every year. Yes, it won't make you rich, but at least it's better than inflation rate of 3%. Yes, your money is safe, you won't lose money. So if you have less than 3 years, if you have like 3 to 10 years, do ETFs, invest in bonds, find individual companies that can make you money. Or if you have more than 10 years, yes, put your money into ETFs, but also try to find individual companies that can help you um, increase your income. Risk money, you only invest in money you can afford to lose. Diversify across assets, like invest in stocks, ETFs, um, single stocks, real estate, it's like that. And know your risk tolerance. Could you stay calm if the portfolio drop by 30%? If the answer is no, then just stick with S&P 500. Never invest borrowed money. Review your portfolio annually. Like uh, if you are trying to invest in the S&P 500, like I said earlier, yes, keep investing, but it's also good to also make sure you monitor uh, the performance, because when it goes down, it's an opportunity to buy. If like on the average every month you invest 500 in S&P 500 and the market crashes 30%, that's the best time to try and use 2,000 instead of 500, because when it goes up, you make way more money. Like I said from the beginning, have an emergency fund. Emergency fund first. Like make sure you have money in savings, because liquidity is very important. Yes, stock market is liquid, but at the same time, make sure you have some money in your savings. For instance, if you invest in Roth IRA, for instance, you're not supposed to take out money from your Roth IRA until you are 59 and a half, which if you take it out, you're going to be penalized. Many of us are still young, we still have a long way to go, 59 and a half. So one of the reasons why they make it in that way is so that people's investment can be protected. They don't want to put money today, take it out tomorrow, and all of that. So, but what people usually do is, apart from the Roth IRA, you have like other brokerage accounts where you can pull money at any time, you can sell your stocks at any time. Use the money, like maybe you have a pressing need, you need $10,000, you want to sell maybe Microsoft stock to meet that need, you can sell it in your brokerage account, not your Roth IRA. So, like for instance, I have like 4 different accounts apart from my Roth IRA. So you have different accounts. One of them, especially this AI builder stock, have a separate account for AI. So that if you make 1,000%, don't leave it there, because in the crash at any time, if there is recession, you may lose everything. Don't just leave it there and be watching this. If you invest money and it goes up 1,000% in like 3 months, pull that money out, put it in safer investment, and then go back. So, for instance, if maybe you you invest 500 in Micron, and in like 6 months, that 500 becomes 5,000. Sell, maybe you bought 10 stocks and it became 5,000. Sell like at this 8. With that 8, you will have captured way more than you invested. So put that 8,000, put it in safer account, then leave the remaining. Even that with the remaining, you make money. Whatever happens to that remaining, like you are safe. That's how to do it. So have your Roth IRA where you'll be investing in VU, but also have another brokerage account where you'll be taking risk. You don't take risk with your Roth IRA. So this is what, like, if you are conservative, you don't want to take risk, put 80% of your money in ETF, then the remaining put it in bonds and cash. If you want to take a little risk, invest 70% of your money in ETFs, put some of the money, 20% of your money, invest it in dividend stocks, and then growth stocks like Micron, you put like 10% in growth stocks, so that whatever happens to it, if you are losing money, you are not losing more than 10% of the portfolio. But for those who have a longer time horizon, like some of us that are still young, that we can take some risk, we can do 60% ETFs or even 50% ETF, and then find the remaining 40%, 50%, we can do individual stocks. These are examples of quality companies. Microsoft, like I said, I don't know what will happen in this world, for Microsoft not to be Microsoft anymore, or Walmart, or Visa, or Costco. Like for Costco to go bankrupt, maybe the world is coming to an end. For Walmart to go bankrupt, the world is probably coming to an end. So find companies like that, invest in them. Google is a very safe company. It's a tech company, but it's very safe. Google is probably worth, I don't know, maybe 3 point something trillion dollars. They are very, very diversified. These are they have Waymo. I don't know if you know Waymo. Waymo is like driverless vehicle. North Carolina is not allowing it yet. So they're already operating in Atlanta. They're already operating in California. So Google is making money more than they own YouTube. They own tons of businesses. So companies like that, once in a while, they may have some issues and their stock may crash. Like last year, Google stock struggled a lot, like first half of the year. Google stock struggled a lot. But those who did their research back then and invested in Google, now they are smiling. Because from between last year and now, Google stock has gone up, I don't know, maybe 150% between last year and now. So, but at the beginning of the year, Google stock was struggling. For those who knew Google, know that Google's income is probably more than, not even probably, it's more than what the income of the whole of Africa. the GDP of the whole of Africa put together, 54 countries. They know that whatever would happen, even American government will not allow to, because a lot of people will lose their jobs, thousands of people will lose their jobs. So, yeah, so these are quality companies that you can invest in. But like I said, if the economy is going down, these companies, regularly do good. Apple will do well, Costco will do well, Microsoft will do well, Visa will do well. This ETF, that's another safe ETF we can invest in. BRKB, it's owned by Warren Buffett. There's BRKB, there's BRKA. BRKB, if a share of BRKB is probably like $85,000. Because it's Warren Buffett. But BRKB is cheaper. A share of BRKB is around maybe 3 or 4. And the good thing with stock investment is if you don't have 400 to put in a single stock, you can buy fractional share. Even if it's $50, you can put $50. If that 400 becomes 800, 100%, so $50 will become 100%. So BRKB owns more than 60 businesses. So it's beyond stocks. So these are companies that are very, very safe. BRKB is a company that does well when there's recession. When everything is crashing and people are afraid, BRKB is the way to go. How to open a brokerage account? We're coming to the particulars. How many of you have opened your brokerage account? I sent a video. So you can download any of these apps right now. You can do it on your laptop, you can do it on your phone. Fidelity, I use Fidelity. Vanguard, they have looked for, so you can open any of these accounts. Charles Schwab, Vanguard, some of these companies have been existing for more than 50 years, so they are very safe. With Vanguard, one thing I like about Fidelity is you can open college fund in Fidelity. You can do Roth IRA, you can do individual stock that I talked about. You don't even have to open a different account. You don't have to do Fidelity and Robin or anything like that. With Fidelity, you can do everything. You can even buy crypto now in Fidelity. Because like I told you, crypto, I don't think crypto is going anywhere. It's very risky. It's very risky. Or even you can buy crypto with your Fidelity account now. So initially, when crypto was still new, most of these big companies, they were frowning at it. Like I remember, like maybe 4 years ago, when I was like whenever I tried to pull money from my chain account to invest in Bitcoin, they would say no. But now many of them have Bitcoin, so everybody is now open to Bitcoin. They know it's going nowhere, and even most of these Bitcoin mining companies now, they are getting into building data centers. So these things have come to stay. Yes, at the beginning of America is currently going through a phase. So in America, there are phases of technology advancement. This is the next phase. So anybody that can do your research, this is the phase where you can make, like I said, very good money. Yes, it's very risky, but this phase is not going anywhere. From after AI, we're now going to robotics. From robotics, I don't even know quantum computing. Computing is bigger than AI for your information. So these things are in phases. So they are not going anywhere. If you can do your research, go ahead.
Okay, so you suggest fidelity page. I'm just trying to open an account. So is it just for me or I share? If I want to do that with my wife, and I just do I share or
Just for me. She needs to have her own account. So the advantage of couples having separate accounts is you can take advantage of the tax break. If you have an account, you invest in it, she has an account, you invest in it. End of the day, you'll be able to save money in taxes.
Is it fidelity investment?
Fidelity.
Okay.
Let me make sure. If you're using app, go on App Store. Another thing about the stock market is they only open from Monday to Friday from 9:30 to 4 p.m. So if you're trying to sell any stock, you have to sell between 9:30 and 4 p.m. But that's one reason why I really like the stock is very liquid. You sell now, you cash out your money. It's not like real estate. If you have a house that you are trying to sell and you've built equity, even if it's 500,000 equity and you're trying to sell it, it will take a while to sell it. So real estate has a lot of advantages, but it's not as liquid as stocks. Like you have to put the money on the house on the market, you get it ready. It will take like a whole month to be able to sell it. But with stocks, you can sell it immediately. So the good thing with fidelity is you can do your 529 collections for your kids in fidelity. So you can be investing for your kids even from when they are less than one. You'll be building their rotary, building their college funds inside your fidelity account. They call it custodial account. So you can be putting money, investing in stocks for them. So by the time they get to college, they have way more than they need to go to college. They don't need to be getting into loans like that. And also you can do you can do rotary for them. As long as they are using it for like the 529 college fund, if you use it just for college, there will be no cost. For rotary, like I said, as long as they don't take it out for H59, they are good. But that's the advantage of life insurance. No, talking about life insurance, life insurance, whatever you take out of life insurance is 100% yours. That's why rich people they put money into their life insurance policies.
And there's no penalty for taking life insurance.
Life insurance, no what of tax. No tax for life. That's why even for Disney owner, he used life insurance money as capital to invest in this. There's something they call surrender value and pull out from the life insurance. And you're not paying tax. And you can choose to either borrow it or just pull it out outright. If you choose to pull it out outright, they're going to subtract from your debt benefits. The amount that get paid to your family, that's why you're really on cash here. Like I was saying about fidelity, the custodial account. So if you have like a child that is really young and they have time, you don't have to risk anything. Just everyone putting in $100, $200. So every year the contribution limit for Rotary for both adults and kids is 7,500. 7,500. So we can't go beyond 7,500 for both adults and kids. But it also depends on your income level. If you are making more than $250,000, there is a back doorway by which you can invest more than 7,500. Is legal. So they call it back door. But if you talk to your financial advisor, they will show you how to do it. So if you are making more than 250,000 in a year and you want to be contributing more than 7,500 for either you and your kids every year, the back doorway will let you do it. But regularly, by law, you should not invest more than 7,000. That's why I said you should have two, and so that once you've maxed out your Roth IRA and you still have some cash to invest, you just invest in brokerage account, and then the money you make from it.
Okay, what if it costs?
So if you if you sell your stocks in less than a year, you are heavily taxed. But if you wait till 1 year plus, regular income. But if you sell it less than a year, maybe if you invested in micro, went up on 1,000%, and like, whoa, this is a lot of money. And if you invested in it too much to go, and you just decide to sell it, it will tax you every day, probably 30%. That 30%, you may still make for profit from the 30%. You don't have to give government 3 months. Just wait until a year. Here is like an illustration of how you can invest your first $1,000. So you can put 600 in VU or SPY. They are the same thing, or IVV. They are the same thing. They are the 500 biggest companies in America. Then NASDAQ. NASDAQ is like the tech sector of American. Like if you're trying to buy tech companies, it's not NASDAQ. The advantage of NASDAQ is you can make a lot of money investing in NASDAQ, way more than make VU. So like if VU is doing 12% in a year, QQQ, which is NASDAQ, would be doing like maybe 30%. But when market crashes, QQQ crashes more. But in the long run, the best thing is to have all of that. To have VU, to have QQQ. So like do 600 in QQQ in VU, and then 200 in QQQ, then 100 in SCHD. But for people who are advanced in age, we say do SCHD maybe 200 and maybe QQQ 100. Because SCHD does better. SCHD and VYM, they do better when there's recession. Your money is safer there, and they also pay dividends. Key lessons to remember: start investing as early as you can. Money will stand to grow. Time is your greatest ally. ETFs and funds are the ideal foundation for most investors. Diversify. A few months ago, software stocks crashed because everybody was afraid that AI would kill their business. Yes, AI would kill a lot of software business, but some of them are software stocks and companies are built differently. Like companies like CRM, companies like Adobe, AI will definitely kill it. Same things that people do with Adobe, you can easily do it with AI now. Yeah. So Adobe stock has been struggling, and it's one of the reasons that Microsoft stock also got affected. They think AI would kill Microsoft business, which is not so. Microsoft business is very diversified, and they also have their own AI platform too. So companies like ServiceNow, AI will not kill ServiceNow, in my opinion. ServiceNow will actually benefit from AI. Yeah. So there are some companies. So 2 months ago, most of these software stocks crashed like 50% because people were afraid that AI will kill their business. So everybody was selling their software stocks, and people even sold companies like FICO. How many of you know FICO? The company that if the bank is trying to give you loans today, they will use FICO to check your credit score, all of that. Like that AI fear almost killed their stock. Like it went down, I don't know, maybe 50%. So it's still trying to recover. But AI will never, you cannot feel fine. FICO. Yeah. So people that have done their research, I'm not saying you should invest in FICO. I'm not saying FICO can still struggle a little, but it's not going to die completely. So there are some companies that AI will definitely kill. So that's why it's good to diversify. Like if all your invested or investment was in software companies, and with this AI advancement, you will lose a lot of money. But if you have a balanced portfolio, your investment is in cybersecurity, for instance, is the way to go. When software stocks were crashing a few months ago, cybersecurity stocks crashed along with the market. But we need cybersecurity stocks now more than ever before. And for those of us who were in attendance during our last year, we realized that even now is where we need cybersecurity stocks more than ever before. So those who realize it took the advantage, or they bought more cybersecurity companies, and today they are grateful that they did, because the stocks are doing well again. They are up from 2 months ago, some of them 40%, all of that. Because like things will happen every day that will crash the market. But if you are doing your research and you know what you are doing, you know how to invest your money so that you won't lose. So, like I said, it's good to invest, have proof, but also if you can do your research, like I said, you will make more money. You will do better than the market. When they say I beat the market last year, is what they're saying is I did better than who who whose performance last year was 17%. So anybody that was able to perform better than 17% definitely needs research before you buy, understand what you are buying. In your social media, there are so many tips on social media today telling who wants to buy. Be careful. The stock market rewards patience. If you are patient, like the example I gave the other time, when Microsoft Meta stock was crashing in 2022, that it went from 300 and something to $80. I was investing, I stopped at 180 because I was also afraid. Like, yeah. So if you are patient, and now a Meta stock is around 500 and something, almost $600. So if you are patient, you will make money in the stock market if you do your research and you know that the company is not broken, only the stock is broken. Those who were able to download the app and set up their accounts, I would recommend some stock. No, so this is not financial advice. You should do your research before you invest in any companies. But I can tell you some companies to invest in. For, like I said, for those who are close to retirement, just 3 stocks is enough. Just do QQQ, maybe 50%, take it, maybe 50 or 60%, and then QQQ maybe 20%, and the remaining 20% do SCHD or VY. And if you are trying to also do risky stuff, open a different account, don't do it with your Roth. Open a different account. You can take advantage of AI as much as you are watching it. This AI race will still take, I don't know, maybe 6 months, 1 year before the bubble bursts. You can make some money before that bubble bursts, and then go back and put the money in what I have. So I would recommend some stocks. These are companies that you can invest in and sleep well at night. Tech, yes, is very volatile, but there are some tech companies that if the market crashes, you can take advantage and buy more. So the tech sector, Microsoft, I don't think it's going anywhere. Amazon, everybody knows Amazon. Amazon, Amazon is doing everything. Amazon is doing everything. They are going nowhere. Yes, you won't be rich investing in Amazon. But if you invest in Amazon, you reach exemplify from investing in Amazon. Google is not going anywhere. I don't think so. Like I said, I'm not good. AVGO will do better than Microsoft. Will perform better than Google. Think will perform better than Microsoft, Amazon. They are solid companies, basically. They are solid companies. But again, like I said, they are volatile. If the market crashes, they will crash more. But it's an opportunity to buy more. Discretionary, consumer discretionary. These are companies that you will always need. Consumer staples, Walmart, Costco, Coca-Cola. I don't know a world where Coca-Cola will stop to exist. Not in America, you know, right? Or Pepsi, P&G. Like, yeah, they make everything. I don't know if there's recession in America, people will still buy from P&G. Clorox, Colgate, Cialis, Colgate. Who will brush their teeth? Whatever is going on in America. So Colgate, these are companies that will not make you rich again, but they will protect your money. When there's recession, Colgate will protect your money. Walmart will protect your money. Costco will protect your money. Coca-Cola will protect your money. P&G will protect your money. And you will do better than the market. Financials, Chase, the biggest bank in the world. So companies like that, you can invest in Chase, Visa. Visa is facing strict competition lately. So the stock has been struggling. I don't know. I don't know what to say about Visa. Because I don't know. But you can still try Visa. Yeah. Because now you can pay with your phone. You don't have to go through Visa to pay. Apple Pay is there. You can pay. People are paying with Bitcoin. Like all these things, we eat into Visa's for. Well, these companies they have so much money that they can always reform and come back bigger than before. So if you are comfortable investing in Visa, MasterCard, it used to be very safe. I don't know what to say in this age of technology. But yeah, so far, Robinhood. So far, Robinhood, they are getting they enter into a lot of things. So the reason why Robinhood is a really good stock is also it could be very cyclical. Robinhood, when there's a lot of money in the economy, Robinhood stock will go up. But when the economy is struggling, Robinhood stock. Caterpillar is industrial. Sorry, our time is going. I'm trying to rush. But these are stocks. Once the market opens on Monday, these are stocks you can look into and start investing. And if you have any challenge, you can do a Zoom call, and I will show you how to do it. Okay. So real estate too is safe. Utility stocks. These are also stocks that do well when there's recession. South me, Constellation Energy I mentioned it earlier. So we're going to the risky stuff now for those who want to take risk. Like I said, this is not financial advice, but this will give you aggressive growth. Aggressive growth. Like 100% in a year, 200% in a year. Aggressive, but when there is recession. Aggressive loss.
Aggressive decline.
Aggressive decline. So some of them are safe. Like for instance, SMH is an ETF. It's a semiconductor ETF. Companies like SMH last year grew 70%. It's still an ETF, but still when Vu was doing 70%, SMH did like 70% in a year. SMH is semiconductor, like KMT, like it's still safer than you can still buy SMH and make money. Semiconductor will not make you as much money as before anymore because so AI do that is in phases. The first phase is semiconductors. That's why Nvidia went up, I don't know, maybe 3,000% in like 3 years because Nvidia supplied everything that people need to build the AI infrastructure. That's why Nvidia went up so much. Nvidia, those who bought Nvidia 4 years ago at $8, that same $8 is now 200 and something. So that's like 2,500% in 3 years. So that's the first phase of the AI build. The second phase now we're getting to is like the photonics that I was saying. So with photonics, I said Nokia. That Nokia, one of the ones in photonics, light, TOHR. If you are trying to buy an ETF that will take care of this For instance, the photonic, we can buy SP, S, SP, SPRS. In 1 year, SPRS 106% in 1 year. It's still an ETF. Yeah, that's open. In 1 year, SPRS 106%. In 3 years, 46%. So this is still an ETF, but it's doing 100% in a year. So yeah, so you can invest in that instead of choosing these photonic stocks one by one. You can just buy SPRS data centers. I know many of us have seen people building companies building the data centers everywhere. If you're trying to take advantage of that, these companies are building data centers. This one's Iron and Nebius, CleanSpark. CleanSpark used to be Bitcoin mining company, but now they've transitioned into building data centers because everybody knows money is in data center. So you can buy these ones, or when you are buying these ones, monitor the CEG. You can buy it. BE is risky, or CEG, you won't make money like you make money in BE. BE, let me think. BE probably went up maybe 15 or 10 in like a year to 15% because they are supplying power to build out. Yeah. So these power companies or CEG, beyond AI build out, they also supply electricity to homes. So CEG is safer. VST also is safer. PWR too, I think is safer, but CEG is one of the safest in that power section. Application. So companies like Microsoft, they are the ones spending the money right now, so their stock is suffering. Eventually, once they stop spending money, it will go back up. Axon. The story of Axon is misunderstood. People think AI will kill the company. But it used to be $800. Right now, it's around three something, around 4. I think it's a good time to buy because they are into body cam. Police use them. I don't think AI can kill that distance. But people think AI will kill it. Axon is a good company to buy, in my opinion, because it used to be 800. But people think AI will kill it. And now I am 400. But I don't think it's going anywhere. Yeah. Palantir. Trump actually tweets. He has been tweeting about Palantir. Whenever he tweets, the stock skyrockets. Palantir has been getting contracts from the government for years. So they help to fight wars with AI. So Palantir used to be $15. I bought it when it was $15. It got to 170. But now it's around 130. So these are risky companies. But if the government is pouring money in a company, that tells you that American government. So you can buy some of these stocks, but don't go all in. Careful. Palantir, Trump speaks a lot about Palantir. So service now. People thought AI would kill service now, but I don't think so. So Snowflake, this is like the phase 3 of the AI build out application. Like when companies start making money, these companies, sorry, they are warning me at the time. I'm just trying to random. Just to give you like story of this ticker symbol. They call it ticker symbol. So robotics is the next phase. Once they are done with AI, they will put that AI into robots. Robots will be doing stuff all around. So if you can buy, Amazon has, I don't know how many thousands of robots now. Amazon will make a lot of money with robots. Tesla, robots. ISRG. So ISRG is a company that uses robots to perform surgeries. So I think it's a good company. They are facing like serious competition from electronics. The other company, MDT. They are also using robots for medical stuff. So these are companies that I think will benefit a lot from AI, from robotics. Cybersecurity, like I said, I don't think it's going anywhere with this AI race. People need to secure, people need cybersecurity companies more than ever before. So these are great companies. I remember July of last year when CrowdStrike stock crashed a lot. The reason why it crashed was there was outage in Delta airline system. And the reason the stock crashed was because CrowdStrike is the one that supplies their cybersecurity, that protects that they are using for their cybersecurity. So people thought CrowdStrike companies failed. So people were selling CrowdStrike company. I used the opportunity to buy it because I know. Like once you do your research, you know whatever is happening is temporary. Yeah. And if you don't want to pick these companies one by one, the first one is an ETF, cybersecurity ETF. So if you buy CIBR, you don't have to, you don't need to risk any of this. Just buy CIBR. They don't go 100% in a year, but will perform better than that. I said 5%. Therefore, real heart. So real heart is also very risky. China is currently controlling like 80% of the world's supply of real earth. And America is trying to promote Trump. America is trying to catch it. So America has planned over the years. Rare earth is needed for everything we do. But China has been the main supplier for years. America is trying to compete now. So they are pouring money into this small companies. These companies are risky, but America is pouring money into them because they want to compete with China. So these are companies that I think everybody should buy. It doesn't have to be a lot, but you can take advantage, and their stocks are still very cheap right now. Like I said, they're not making money yet. But America is backing them up because they want to win the rare earth rates. Hmm? You have to analyze stuff. We will talk about that in another class. How to analyze stocks. Like for those who are trying to take risk, trying to research companies, one individual companies, we'll teach us how to analyze companies to know which companies to pick. But in the meantime, you can just do ETFs if you're not comfortable investing in them. Like I said, all these companies have ETFs. Like for memory, like MU, like I said, has gone up 700% in this year. This MU. The ETF for memory stocks is DRAM. 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 If you're buying it now, you are getting exposed to like Micron, SanDisk. SanDisk has gone up maybe 1500% in a year. And everybody knows SanDisk, you will not remember now. But SanDisk, ASNDISA. Thank you so much.
One question about maybe you mentioned a WhatsApp group.
Yeah.
How do we get that?
Secondly,
you mentioned you're going to share this.
yes, definitely.
So is it on WhatsApp group?
So-
there address we're going to be.
Yes, there is a sign-in sheet that we usually pass around. I forgot to bring it, but I think my wife has. Oh. Yeah. So once I have the information, I'll add it to you. So what I'm trying to be doing with the group is I want to be suggesting stocks once in a while. But I don't know how. I don't know if people will be open to it. Because I don't want people to shoot me that I suggested a stock and the guy suggestion. No, suggestion. Yeah.
This are suggestions.
I know.
I think it's a good idea, but very happy with that. If you give out an information, it's always if you
That's really great to go that you know that you're already.
yes, because you don't just take it out to their friends.
Thank you. Also, like I said, have more than one account. One for your Rotary retirement account. Don't YOLO with that account. Just put invest VU, QQQ, and SCHD. Those three. Make sure VU is like maybe 60%, and then the other one's 20%. Make sure you don't tamper with that. Just keep investing, keep investing. You can set it in a way that money will be going from your account into that brokerage account, that other account every month, $100. And if you have extra money, you can put into it, invest it into Roth IRA. But then have a separate account that you can YOLO with these risky ones. If you make money from the risky investment, take out the money, put it into Roth IRA. Like if you put $100 in the risky investment and it doubles, pull it out, put it there, and you don't have to pull out everything. Pull out some, leave some to still keep making you money. Pull out some, put it in Roth IRA. Thank you so much. You don't have any other questions?
You mentioned about just playing it safe with ETFs.
Yeah.
So, really, yeah.
You don't have to filter. You can just invest. If you like to look use yeah, and then you can you don't have, so
What do you say for this one as a client person?
so once your account is all set up, you search like for instance Google, then you can have back.
Oh, okay.
So you can't buy right now, but you always have to show us. So you can, if you have the whole $688, you do it as here. Just put on the floor. You have it on them. But if you don't have $620, $688.
I was like, oh, it's too fun.
I don't
So we can do this all too.
Victor, did you tell them the hours when the stock market is?
Yeah, I said. So the stock market is open from Monday 9:30 to 4 p.m. every day. Monday to Friday 9:30. On holidays they are also from 9:30 to 4 p.m. every day.
Eastern time.
Eastern time. So but also once you set up your account on your laptops, also download the app. It's easier on the phone. So that if you are outside and these stocks are on sale, you don't have to be looking for your laptop. Just use your app, buy it, then forget about it. Thank you so much.
Thank you so much.
Oh, we're trying to